You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz. It's 6/2/21. Well, when last we talked with our next guest, he was telling us a cycle high was coming for gold, perhaps silver as well, in May. It looks like it's come. We want to get an update on it. I'm talking about Eric Hadik. If you got a question for Eric or myself, why don't you send us an email to kl@kerrylutz.com. Eric, welcome back. So, as promised, gold went higher in May, and good thing we didn't sell and go away, right?
Exactly. Thanks for having me back, Kerry. And yes, since the intermediate buy signals that gold and silver generated in late March, the focus has been on these monthly cycle highs that I've talked about. It's a much broader, larger magnitude cycle that was coming into play in late May, early June. It wouldn't surprise me to see some additional upside in the first 2 weeks of June. And again, dealing with that magnitude of a cycle, it also wouldn't be invalidating the monthly cycles. So I use them as a backdrop and have used price indicators and some more specific technicals as this uptrend has unfolded the last 2 months. And one of my primary price objectives for gold has been up to 1920, which we've almost reached. And it's just been kind of an interesting thing for me in gold over the last year and a half, that it has traded in this sequence of $80 ranges. And it will kind of set a low when it was first, just before it took off to its high in August. Its final low was in sync with these $80 ranges, and then it surged up to the highs. Then its first sell-off came back down. But what you have is basically parameters at kind of these ranges between 1680 and 1760. Then between 1760 and 1840, and then between 1840 and 1920. And gold will trade down to one of them, hold support there, go back up, test the other. Then it'll spend a little time in that trading range, and based on what indications it's giving in that trading range will kind of give you an idea of where the next target is. But like I said, we had, the initial sell-off in August, September took you down to 1920. Then it rebounded up to about 2000, which was another $80 higher. Then it broke down from there and went down to 1840, ultimately down to 1760, vacillated back and forth. And then its final spike low in March was a pair of tests to 1680. And just based on a lot of other indicators as well, that's also kind of a more general type of tool. But many other things we're saying to look for a rally from that 1680 level up to 1920, and that would be the real decision point, the real critical juncture in gold. And we're coming into that as we enter these weekly and monthly cycle highs in the first couple weeks of June.
Right. So when you say critical, you think it's reaching its peak, or how much higher can it go?
Well, I think that gold is confined and will continue to be confined to a broad trading range. And one of the factors that I see influencing it in the coming months is that I'm still looking for a major low in the U.S. dollar in this same time period, the first couple weeks of June. And if gold has given this moderate rally from its late March lows, but not gotten back up to its August 2020 highs. And if the dollar bottoms and starts to recover like I expect, I think that is going to weigh on gold and keep it in this trading range for a while. I do think that we could see another run up to higher highs than whatever is set during this peak. So wherever we top out here in early June, I think that coming into August, September, we'll probably see gold and silver head to higher highs than that. But that would be even more critical to me as far as whether gold is setting a major top. Because when you back up and kind of look at the forest for the trees and the entire currency war cycles that I've been discussing since 2015, you had this whole time frame where from early 2016 into mid to late 2021 was where I had forecast for precious metals and other anti-dollar vehicles, which also cryptocurrency entered that shortly after, but that those anti-dollar vehicles would gain on the dollar throughout that entire 5 to 6 year period, but come into a multi-year top in 2021. So from that broad cycle perspective, and that's in sync with a 40-year cycle where you see this battle between fiat currency, hard currency, and now digital currency. You see that battle rage every 40 years, and the last time, look at what gold did in the late 70s to very early 1980s, running up into a multi-year peak, and there are similar things as you go back on 40-year intervals of time. So you've got these multi-decade, multi-year, multi-month, multi-week cycles all coming into play. If you look at the broad stroke perspective between late May and early September, but that looks like it's probably going to be a pair of peaks in there. But beyond that, we could be looking at a pretty significant top in precious metals for quite some time.
And quite some time, is that like months, years, decades?
It could certainly be a 1 to 2 year top. And that's the thing, too, when I'm looking at monthly and yearly cycles, some tops are the end of a whole trend and aren't seen, kind of like the peak in 1980 in gold. Those peaks aren't seen for decades. Others are in a series of ascending highs to where you'll set a peak, you'll see a corrective phase for maybe a couple years, and then if it's in a broader uptrend, a market will continue to forge to higher highs after that. But I would be looking at least a 1 to 2 year peak.
Interesting. And
then it's really the price action after that peak that begins to determine what I'm expecting looking out a few years from there.
I gotcha. All right. Well, let's go on to other things. How about the U.S. dollar? You were predicting some weakness for right around this time, and sure enough, we've seen it. We at the end of the weakness, and then it firms up, or where are we?
Yeah, I think that it's clear that the dollar index has been in a trading range more or less for the last 4+ years. And it's at double peaks up around 103, and then it's had its support down around 88 to 89. And I think that that's where the dollar will find another bottom here in the near future. I'm looking for a spike down to about 88.50 on the dollar index, and that's a lot of intermediate and now 2 to 4 week and 2 to 4 month targets to the downside, but coinciding with that and reinforcing that It's the level where the dollar bottomed in February of 2018. And if you look at a monthly chart in the dollar, it's really what Elliott wave aficionados would just call a flat correction, where you have two successive highs at pretty much the same level and two successive lows at the same level. So if you draw parallel lines between them, all you have is a horizontal box where the market has traded flat in that overall range. And even the time or the duration of the two sell-offs back in 2017 into early 2018, and now from 2020 into mid-2021, the duration of those two sell-offs has been pretty similar. The magnitude is pretty similar, and you've just got a lot of factors anticipating a bottom around 88.50. And I think that the dollar will remain in that broad trading range probably for at least a couple more years. So even though it bottoms and starts to work its way higher, that doesn't mean that it's suddenly taking off to multi-decade highs or anything like that. It's just that we have a 6 to 12 month cycle low and other factors showing strong support that should keep a floor under the dollar.
Mm-hmm. All right. Well, yeah, that seems to make a lot of sense. So interest rates, we've seen them go up. They've spiked. Now they've gone back down a little. They're kind of moving around a bit. What do you foretell there?
I think that could be one of the factors that impacts the dollar, impacts precious metals, even impacts equity markets out over the next 1 to 2 years. And what I have been looking for is, first, you started out with this very consistent 4-year cycle that projected a major top in bonds and notes, so a corresponding low in interest rates. For the middle of 2020, July 2020 was the optimum month for that peak, and bonds and notes peaked right in sync with that, and like you said, sold off into March of this year. That was kind of a leg or a one leg down, and what I've been looking for is a rebound in bonds into July of 2021, where we set a secondary peak, a much lower peak in bonds, and a higher low in the corresponding interest rates. But then from there, I think that interest rates are going to start working their way higher for the next anywhere from 12 to 18 months. And so bonds heading back down during that same time frame. And that could be a response to a few things, from economic recovery to fears of price inflation. You've still got several commodities that are at very extreme levels, lumber being one of them, copper being another. And so at some point, you kind of get that correlation to interest rates kicking in there too. And there's other reasons as well. But if you did see interest rates starting to move higher, like I expect in the second half of this year and then through a chunk of 2022, that would be something that could have a positive impact on the dollar. It could have a little bit of a suppressive impact on precious metals, and ultimately could even weigh on stock indexes out in the future.
Yeah, well, I was going to ask you about the stock market here. Are we looking at a peak at the present time? Where do you see it heading?
Don't just survive, thrive. The Financial Survival Network.
Fury Gold Mines is a Canada-focused exploration and development company committed to aggressively growing its scalable, high-grade gold assets with major drill campaigns planned across its 3.5 million ounce portfolio. Fury is led by a management team of proven explorers and developers with a track record of success in advancing and financing project development. Fury Gold Mines is well positioned to create value for investors with low-risk development growth and the potential for a new major discovery. Fury Gold Mines trades on the TSX and NYSE American under the ticker FURY. To learn more, go to furygoldmines.com. That's furygoldmines.com.
This is the Financial Survival Network, the information you need to thrive now more than ever.
Yeah, stocks have been adhering to this just uncanny 16-month cycle, as well as several weekly cycles that it's been very consistent with. But, when I explain to my readers how I look at cycles and the cycle progression tool that I've developed, it basically tracks a sequence of turning points, extremes that move along almost like a sine wave. And so you'll, in the theoretical textbook, perfect example or illustration of this, you would get 4 successive lows at a particular cycle interval. And then after that 4th low, you come into the time where a cycle will then, a market will go through a strong uptrend, and the cycle will extend throughout that entire up move and invert to where it now times the first peak in that uptrend, then you get some consolidation, then up to higher highs at that same cycle interval. So again, you'll get 4 consecutive cycle lows, then 4 consecutive cycle highs, and 4 consecutive cycle lows in the textbook example of that. So if you look at equity markets going back over the last 8 years, they had a very consistent 16-month cycle between multi-month, sometimes multi-year cycle lows in June of 2013, then October of 2014. Then when you had the kind of Chinese stock meltdown in the middle of 2015, and it finally bottomed out in January of 2016, January and February of 2016, that was in sync with that same 16-month cycle low. Then you saw another one in May of 2017, and that's when the cycle was preparing to invert. Equity markets rallied strongly all the way until September of 2018. And as we came into early 2020, I kept writing and warning about this, that January, February of 2020 was the next phase of that cycle, but it had several corresponding cycles, and I published a few articles called Perfect Storm of Sell Signals. And that 16-month cycle just timed the February peak in stock indexes perfectly last year. Saw that sharp sell-off into late March. And then from that point forward, I've been focusing my readers on May or June of 2021 as the next significant peak. And that would come, a peak in June would come exactly 16 months from the peaks we saw in February of 2020. And there's been a lot of corresponding cycles. There's a approximate 32-week cycle in the Dow Industrials and the Dow Transports that has kind of oscillated on that same series of lows and then highs. It has been projecting a peak for the first couple weeks of June. And there's a lot of indicators that show that these markets are reaching an extreme. My upside target for the S&P has been at 42.37 to 42.70. So you're reaching major price targets as well. And it's all coming together in this time frame when I'm looking for some significant turning points in a lot of markets. So I do think that the stock market is probably going to peak by mid-June. There's been some very interesting kind of yellow flags, warning signals going up in a lot of the key tech stocks over the last month and a half. I think that's going to play a role here. They've kind of been leading this topping process. And I've been discussing some precise daily cycles when I think that the NASDAQ 100 will probably see its next and final peak. But it's all coming together to anticipate a multi-month, potentially multi-quarter peak around or by the middle of June, and then a more significant sell-off than what we've seen in a while.
All right. Yeah, well, the complacency in the market is kind of astounding. If you look, the VIX has not been this low in many months, and now it's just everyone's just expecting it to go higher, aren't they?
Yeah, exactly. And there's a lot of different correlations and contributing factors. One of the things too that I'll often talk about is just the energy/equity connection. And even crude oil and all the oil markets, I've been looking for an overall rally into the first half of June and a pretty significant peak there. And that's one of those things that you see often coinciding with peaks in the stock market. You go back to September, October 2018, and the two markets peaked in almost lockstep with each other. And then you saw the sharp sell-off from October through December of 2018. You saw similar things back in the beginning of 2020, and now you've got the oil markets in what I think are a kind of a blow-off rally. I think we still have some more upside there, but that too plays into this time frame where so many things, so many markets and market arenas or complexes are nearing some extremes and coming into what's expected to be some multi-month turning points. So there's certainly the synergy. Now I just need to see some specific price action to signal each one of these. And that's what I keep trying to prepare my readers for leading into this time frame, because it could be a pretty momentous one.
Wow. So we got to expect a lot of volatility here then, huh?
You could. Some of these tops are made even if you look at like the NASDAQ 100, its volatility or its ranges have been narrowing and narrowing for the last couple months. And sometimes you go into those tops with a little bit of a whimper, and sometimes it's that final blow off spike that sucks in the last remaining bulls, and then you see a sell-off just as violent as the culminating rally.
Yeah. So caution is the byword here, huh?
Yeah, I'm starting to look at levels to exit long positions in many of these market complexes. We're not quite there, but yes, I would certainly be starting to exercise some caution, shifting away from being aggressive on the buy side in a lot of these markets, and starting to think about where some good levels to take some profits are.
Okay, and finally, oil opinions there.
Well, just like I was saying, we're coming into a pretty critical cycle high that I think we're going to see in June. I've explained several different price factors, wave calculations, and extreme technical indicators that I use, and all of them have been showing crude capable of spiking above $70, could even get up to around $73 a barrel. But I think that's going to be the extreme move for crude for this point in time, and that probably coincides with these other peaks that we're talking about.
Okay, so what kind of range do you think it'll be in going forward?
I think that it will more or less, once it has spiked up to that level, more or less build a trading range between its recent lows around, and by recent I mean the last couple months, recent lows around $56, $57, and the ultimate peak, which could be, like I said, is as high as 73. If a couple months from now it's worked its way back down to that $56, $57, $58 level and is holding support, there's an argument that it could start a new uptrend from there. But that's going to be the most pivotal level of kind of do or die support looking out over the coming months.
$73, that's pretty negative for the markets too. That really affects people. Any other markets you're watching that we should pay attention to here?
I continue to watch several of the key commodities. Grain markets are, I thought that they could probably stretch their moves up into July, but that they're nearing a pretty important cycle top. Lumber already did fulfill some key upside targets in both timing and price, and I think that that's going to, kind of like I was just talking about with crude oil, set a trading range initially between its peak and its more recent lows of a couple months ago. But that's going to be one market that really has an impact on a lot of things over the next 6 to 12 months, because it has certainly impacted home building. And, you keep hearing about a lot of builders that are selling homes, pouring foundations, and then just stopping right there, waiting for lumber prices to come down before they'll frame and build a house. And so you've had this little bit of a bubble that's been created by that in home prices. So you have a lot of things that are all loosely tied together that over the coming months you could see start to unravel slowly at first. And then once you start to see a couple of them pick up momentum, that's when you get into the prime opportunity for some good sharp moves in a lot of these markets. But you really need to be on top of it day to day, week to week, unless you've got enormously deep pockets to be able to manage the swings that we're seeing in some of these markets.
Oh. All right. Well, it's definitely interesting out there, that's for sure. Getting more interesting by the moment, so it would appear. And I guess eventually all markets do peak, and then we look for lower prices, regardless whether it's Bitcoin, widgets, or whatever. Speaking of cryptos, opinions there?
Bitcoin has been tracing out a surprisingly textbook wave formation when it was back in February, March, starting to mount another rally. I published my upside targets right around 65,000, and that was based on a couple different indicators, but also some wave objectives. And Bitcoin went right up to there, and from the time it hit 65,000, I kept telling my readers to look for a sharp drop back to 29,000, which is where that previous low is. Kind of like I was just talking about with crude and with lumber. It's kind of a standard wave principle too, that when it's pretty clear that you're completing a fifth wave up, a market will usually retrace back to the fourth wave low. So that's the low before the final rally. And that low came into play in January of this year. So it also has significance from an intra-year trend perspective, because the lows in Bitcoin were right around 29,000 for the year. And a couple weeks ago, we saw it suddenly plunge from 50,000 down to 30,000. So got within 1,000 of the target I was looking for. But I was just doing some work up on the daily and weekly charts on Bitcoin, and I haven't even finished it. I'm going to include it in my intra-week alert today. But it's looking like we could see a little bit of a rebound and then another quick plunge that could even have it spiking below that 29,000 level in the next few weeks or month. And like I said, I'm kind of working out some specifics there that I'm going to be publishing today, but that's the general outlook of what I see there. But if it can avoid giving a weekly close below 28,500, then I would say Bitcoin is holding some pretty important support and should begin to work its way back up towards the highs. But that is a kind of do or die level. If it gave a weekly close below 28,500, 28,000, that would start to indicate a much broader and more long-lasting top that's in place. So at this point, it's done what I was expecting on a 1 to 2 month basis. That dropped from 65 down towards 29,000. And now it's where I need to let the market show me what to expect for the next phase.
Yeah, because if it breaks its 200-day moving average, well, that's downright negative, isn't it?
Yeah, yes.
So, and certainly wouldn't surprise, because it looks like it's behaving very similarly to the way that it behaved in 2017 in December, right?
Yeah, there are some similarities, and even the fact, like I said, that it appears to have completed a very clear textbook 5 waves up from March of last year, March of 2020, reached some wave objectives. That kind of tells me that we probably have a longer lasting peak. And I continue to write about how I view the overall battle between the fiat and the hard and the digital currencies. And sometimes I'll use the analogy of the old game of rock, paper, scissors, where it's a 3-way battle, and often it's just 2 of them that are battling at one point in time, and the third one is kind of sitting on the sidelines, meaning it's just in more of a sideways trend. The other analogy I use is just a very basic Algebra 101 equation of A times B equals C. And you get that where the A, B, and C each represent the intensity of the trend in gold, in the dollar, in Bitcoin. And even in the last couple months, you've seen this where when Bitcoin had its surge from late 2020 into early 2021, gold and the dollar were, well, actually, they were both moving in contrast to that, both drifting lower on balance, but they weren't in this very strong trend. Then once Bitcoin topped and was kind of just tracing out a topping phase there in March and April, and the dollar was also it was selling off a bit, but just bottoming. That's when gold then had the freedom to see a strong uptrend. And so you just get this interplay back and forth where usually just one of the 2 anti-dollar vehicles is able to maintain a significant trend, and whichever one it is, the other one's usually in more of a consolidation market. And if what I'm looking for with the dollar bottoming and even gold having the potential for, once it tops, sees a sell-off and the potential for one more rally into September, that kind of, in that equation I'm talking about, doesn't leave a great deal of upside potential for Bitcoin. It could certainly be vacillating pretty violently between 28,000 and maybe 50,000, but there's a lot of factors looking forward that could continue to keep a ceiling over Bitcoin, at least over the next 3 to 6 months, maybe even 6 to 12 months.
All right. So for the next 3 to 6 months and maybe 6 to 12 months, we can expect a range.
I think so.
Okay. All right. I think we've covered all the bases here, Eric. Tell you all to go to Eric's site and just tell us where to find you again, Eric. InsideTrackTrading.com. That's inside with 2 I's in the middle, so it's INSIIDE, tracktrading.com. All right, and send us your emails to kl@kerrylutz.com. We'll forward them off to Eric, get you answers to your questions. And while you're at it, go to our site, financialsurvivalnetwork.com. Sign up for our free newsletter, and we'll be in touch soon. Thanks so much, Eric. We'll talk to you real soon. Thank you, Kerry.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.